Hello there, traders. I hope you can see me. I hope you can hear me. If you can, let us know. That always helps. It always makes for a good start to the session. Here we are today for the next in Admirals webinars, which is today about an introduction to scalping. That's great. I can see Peter and a few others that you can see and hear me. That always makes it a little bit easier and better for us all, doesn't it? Okay, that's great, super. And if you are joining us here and you've got questions or thoughts, okay, about scalping, then please, by all means, just stick them in the chat box there. Okay, watch it. We'll be able to sort of come back to you with them. Or alternatively, you're watching this later on demand on the Admirals YouTube channel, and you're finding this useful, well, be sure to give us a thumbs up. And if you have questions or comments or thoughts about future sessions that you'd like to see Admirals do, then put them in the commentary box. And also, please make sure you click on the subscribe, because you'll then get effectively, you'll be notified when all the sort of latest elements of Admirals content comes out, and you'll also be able to see some of the tools and resources that Admirals are offering to their clients. So great to see so many of you here today. We've got a great audience there. Thank you, Anil, Jacek, Vincenzo, Peter. Okay, great to see so many of you here there. Okay, that's fantastic, because it's an interesting topic, isn't it? Scalping. So that's what we're going to cover today. It would help me enormously if you could just let me know in the chat box, what your own experience of scalping is. Okay, maybe you're completely new to trading, never heard of it before. It's completely new to you. You don't know. That's absolutely fine. Perhaps you know of it, but you've been a little bit wary of trying it, or you're doing it. You're doing it every day. It's part of your kind of trading style. In which case, that would be good to know. Today is about an introduction to it. Okay, so we will be keeping it sort of kind of light-hearted where possible. But I'm going to share with you a couple of kind of scalping setups, okay, that you could take away and work on tomorrow. So James said that it's new to me, right? Well, that's why you're here, James, okay? Because we're here to just give you a little bit of an educated introduction, just help you just understand a little bit more about what's going on, and actually how that can sort of work in your favor, all right? To just be a little bit educated. Forewarned is forearmed, and all that, as they say here. So let's crack on. So if we just bear with me 1 second, ladies and gentlemen, I'm just going to try and share my screens with you. Okay, I'm going to bring up the slides, and hopefully you'll be able to see that. There you go. So as I said, hopefully you can still see me. Hopefully you can still hear me. Okay. Hopefully you can see the slides. Okay. It would be good to be able to know that. That's super. So here we go. An introduction to scalping. All right. How can we scalp markets as a retail trader? Right. It's what do we need to be aware of? So Anil says, tickety boo, that's fantastic. That's excellent. That's great to have you here. Jack said he's doing it every day. It's great to have you here. Thanks for your input. And and as I always say, okay, it's you can always learn in trading. Okay, the moment you think you know it all is normally the moment before something bad is due to happen. Okay, so if there's people like Jacek here, they have their own views on scalping. That's absolutely fine. I'm quite happy for people to put in comments about their own thoughts, about their own particular experiences. All right, because I think everybody can learn from that. But we'll talk about an introduction to scalping for new traders. That's what we'll be looking at. And here we are with Admirals, okay, a Forex and CFD broker with a wide range of instruments to trade, okay, global presence and local support, licensed and regulated across a wide range of regulatory environments, providing competitive spreads on the most popular trading products, and also allowing you to engage markets using the MT4, MT5, and also the Admirals Supreme Edition version. So if you have any questions about Admirals, get in touch with your account representative, and they're very, very happy to help guide you. So Jessica said it's always good to see other traders' techniques. Yes, yeah, it is. I'm going to share, as I said, just a couple of very, very simple, all right, ideas that people can take away, okay, and start to investigate scalping themselves. But before we get to that, for those of you who are of the Instagram generation, Instagram persuasion, you can also now follow Admirals there, okay, at Admirals Global. Go on there, give us a follow. You'll find lots of great information from the content team, okay, about what Admirals are up to, and also about heads up about upcoming new webinars for you to come and join, whether it be from myself or from my colleagues Marcus and Jens. Right, what is on the agenda today, ladies and gentlemen? Right, what is on the agenda? Well, not unsurprisingly, we talk about what is scalping. As I said, I always say, I appreciate we do have we have a global audience who come to these sessions. Also, we've got a very wide range, okay, of people who are completely new to trading, and people who've been doing it for many years. All right, so I appreciate we've always got a wide spectrum. Today we're going to be starting on trying to just give people an introduction, okay, a little bit of a hint about scalping. Most importantly, about how can we do it safely. What is it that we need to be aware of? What kind of markets should we focus on, because that will have an impact as well, and how should we do it during our trading session? And as I said, I'm going to share just a couple of ideas that you can take away and look at, okay, just as you have an introduction to scalping, just be able to actually have a look and see how this actually plays out in the live markets. So for those who don't know me, my name's Paul. I've traded for many years, okay, including trading for hedge funds and other clients. My own focus tends to be on FX indices and commodities. Okay, that's where I find I have my those are my sweet spots. And for longer term trading, I'm a trend trader. Okay, primarily sort of dominant trends and momentum. And for intraday trading, I tend to be sort of kind of mean reversion and reversal trader. And an element of that might sort of seep out today, okay, as we talk through this particular session. So, an introduction to scalping, ladies and gentlemen, okay? So, as the slide says, scalping is a popular way to engage with markets, and lots of people are attracted to it. Lots of people are fascinated by it. Lots of people see it as maybe an easy endeavor, a way to very quickly sort of build their account equity. But the reality is, it's very important to be prepared for what awaits. Okay, as it says there, things happen fast when you're scalping, so you need to know how to handle yourself. All right, it's the way I would like sort of describe it is, I suspect the majority of people who join us today, they would be of an age, okay, or an experience where they would have a driving license. Right, so you have a driving license, okay, and qualifies you to be able to drive a car. But, and you might be able to drive your, Ford, Audi, BMW, what it is, quite safely and happily around the streets of your local town and village. But, if I took you and then stuck you in a Formula One racing car it's for the British Grand Prix this weekend, the Formula One Silverstone, and said, listen, it's the same, 4 wheels, an engine, a steering wheel, off you go. The likelihood is that you'd probably crash by the first corner, okay? Because you're suddenly operating at a speed and an intensity which you're not used to, which you're not ready for, okay? And if you're not prepared for it, if you're not educated, well then you're going to have a crash. And so that's what we're here today to talk about, is actually to help educate you and to make sure that you're starting to be prepared for what awaits. And as it says in here in this session, we'll discuss a couple of simple concepts regarding scalping, and I'll provide you with 2 sort of scalping tactics which you can take away and have a look at. So, I've said this many times when it comes to trading, ladies. There is no perfection in trading, okay? Anyone who tries to tell you there is, or that anyone tries to offer you is, they don't know what they're doing. There is no perfection. What it is about, doing a good assessment about, what the pros and cons are, what are the strengths and weaknesses, where are the opportunities, where are the threats, and go standard SWOT analysis to work out, okay, where is the best space for you to be operating. And like everything, there are pros and cons to scalping markets, all right? The pro is scalping lends itself to most markets, all right? But I would suggest there are some markets better than others. You can also scalp at any time, which makes it feasible for part-time traders. And once again, yes, you can. You can scalp any time a market is open. But there is always a caveat to that, is that there are some times which are better to scalp, and there are some times where it's probably not the smartest idea to scalp. Okay, and we'll touch upon that a little bit later on in today's session. What that also means is your time exposure is limited. Remember, as a scalper, okay, you're getting in and out. Your trades might just be for a few minutes to maybe half an hour. Okay, they're not, we're not looking at any particular long that. So, in terms of your exposure to the markets, and generally it is limited, right? Which, if markets are having a little bit of a crisis, well, then that can actually be useful, all right? That can actually help you manage your risk exposure. So, there are some pros there. But equally, ladies and gentlemen, there are some cons as well. Okay, there are some elements you need to be aware of. All right. Truthfully, my experience is that it's a style suited to more experienced traders. I think you need to get a little bit of trading experience under your belt to be able to do it. Okay, why? Because you need to, things happen fast, so you need to understand how your platform works, for one. Okay, just to understand it. Okay, just understand what are the strengths of the platforms you're working on, what are the limitations that how do you utilize that in your own trading decisions? Because when things are going to happen fast, that is when people make mistakes. Okay, that's when the old fat finger comes into things. So if you've been a rugby player like me, you've got big sort of thumbs and fingers, that can count against you. Okay, when things are happening fast and you need to be tapping in and pushing buttons. Okay, and so you need to know what you're doing beforehand. All right. When a market turns against you, it can be very quick, and that's very true. Now, admittedly, it might be said that when any market turns against you, it can happen very quickly, and there is a degree of truth in that. But when you're scalping, okay, when there's a few pips here and there, in terms of the difference between success and failure, well, that can basically make a big difference. All right. What it also means, and this is important, and this is another element about why it's good to have experiences, you need to be very disciplined in your execution. You just need to be disciplined in your trading. All right, and that tends to come. Okay, that tends to come from from being a bit of experience. Okay, from actually having a little bit of nous and know-how, and actually having sat and sort of traded through that. That is the sort of thing that will help you. And also, you can only do it for a short time. All right, this is not something. Well, you might think you can sit there for 8 to 10, 12 hours a day scalping, right? You might think you can, but the reality is you can't, because trading is a performance activity, which means human beings generally tend to perform well for about 40, 45 minutes. After that, without a break, your performance kind of starts to degrade. And when you're engaged in, let's say, a fast-moving, intense experience like scalping, well, then you will be burning up, right? You'll be burning up your kind of your psychological capital, shall we say? All right. So you really only want to be doing it for like 1 to 2 hours max. Right. I'm not saying you can't do it longer, but what you will find is that it's better to do 2 hours of very, very good scalping rather than 10 to 12 hours of shoddy, mediocre, scrappy scalping. All right. Okay. This is trading. Okay. You don't get paid. You don't get paid by, the number of hours you spend, buying and hitting the buy and sell button. You get paid to perform well. And as it says there, for that, you need to be disciplined. You need to be experienced. You need to know what you're doing. Okay. And, so if you're new and you're considering scalping, please take it on board. Please take all those pros and cons on board. So Jacek says, it's very true. Normally after 3 to 4 hours, I was losing money, which I've earned hours before. Absolutely spot on, Jacek. Okay, it's just, it's not a reflection, not a bad reflection on you. You're just a human being. Okay, we're all human beings. Okay, we tend to operate well for, as I said, around about 45 minutes. All right, and anything more than about 2 hours sat at a desk trying to scalp, your performance is going to start to go down. All right, so as I said, better to sort of kind of be disciplined, give yourself a 2 hour window within which you'll operate, and then actually it works or it doesn't, and you step away for the rest of the day. Okay, that is over the long term, that is actually how you're more likely to perform better as a scalping trader. So that's great. Thank you for your insight there. Okay, it's great to hear other people's experience and to confirm what we're sharing with you here. So it's people new to trading, they think, I'm just going to open up my trading platform. I'm just going to bring up some charts. I'm just going to batter away and this will all be fine. But actually, you also really need to sort of take on board some of the elements of the factors affecting scalping. Okay, so firstly, you've got liquidity, which as a general rule shouldn't necessarily be a major complication for, let's say, new retail traders starting off very small and slowly. You shouldn't necessarily have too many issues being able to execute your trades to get in and out. I would caveat that around major news announcements, then kind of all bets are off, right? Because the market's just become volatile, which is the next element, volatility. And volatility is it's like a Goldilocks. All right, we're looking for that kind of Goldilocks moment. Okay, if there is no volatility, well then actually markets just aren't going to move, and trying to scalp in there is can be challenging, can be difficult if the market's not doing anything. But equally, if you have too much volatility, all right, too much volatility, maybe around a major news announcement or a major event that has occurred where markets are enormously volatile because the market's trying to work out what's going on, and traders are trying to sort of either clear their positions or basically enter the markets. You can have too much volatility, and then it becomes very difficult to try and scalp because you might struggle with getting the kind of fills that you're looking for. So volatility is a little bit of a, as I say, it's a little bit of a Goldilocks. You don't want it too hot, you don't want it too cold with that. There's also the question around about the question is also around about time frame. So Anil says Goldilocks, aka Greenspan. Yeah, that's very good. Anil, nice quip there. Nice work there, Paul. That's a very good quip. And as we look at time frames, okay, now, this is there's two elements to this. All right, there's two elements to this. Namely, there are the time windows. Okay, the time windows within which you should probably look at scalping. So let's say you're going to be trading the FX markets. Okay, you might be looking at the start of the European session. Okay, as that market starts to move, or you might be trading it during the US session. Okay, but trading it, let's say in Europe, just trying to scalp late at night, I don't know, between let's say 9 p.m. and midnight, okay, European time, there's not going to be a massive amount happening there. Okay, you're getting crossover there. Okay, the vast majority of both the American traders, the European traders, they're safely tucked in bed. There's not much going on. It links into that kind of volatility element. So there is about understanding the time windows that are suitable for yourself, and then also timeframes that, as I said, that time windows that perhaps you shouldn't be trading. Okay, so personally for me, and this is a personal thing, okay, this is a personal element, all right, is that if I'm trading like the US indices, okay, I tend to leave the first half an hour, okay, the first half an hour and the last half an hour of the session. So from about 2:30, well, what would be here in the UK would be kind of 2:30 till 3 p.m. okay, UK time, when the US markets are opening. I kind of tend to leave those. Okay, I just let the market settle itself down, and then I would look to engage. Right, and so then I would be looking at the kind of time windows. So for for US markets, for me here in the UK, okay, that's what I'm looking at, around about 3 o'clock to 5 o'clock. Okay, that is a nice 2-hour window that I could operate in. That there's I know there will be good marketing. You've got the end of the European session, you've got the American markets open, so there's a nice 2-hour window there for me to focus my time and energy on, a bit like as I was saying before, because you can't really do it all day. Okay, or you can't do it at the kind of levels that you need to do it in terms of managing your own performance, and that becomes increasingly important at the sort of the further down you go in your trading journey. And then also, finally, but in some respects, the most importantly, it's about risk management. And for those of you, if you've joined our previous sessions in the past, all about kind of intraday trading, okay, intraday trading, which perhaps a step up from scalping, we still talk about how it is unbelievably important to manage risk, and that is crucial, okay, when it comes to scalping. So, you don't be trading without a stop loss. You only sort of risk a small portion of your account on a trade. You invariably, if the trade goes against you, okay, you honor your stop loss, or if you have to, you cut the trade, okay, as quickly as as possible. Or don't sort of get caught up in a bit of analysis paralysis, okay, or a little bit of fear, because they will all be triggered. Okay, you just actually have a couple of simple rules. All right, you only risk a very, very small portion of your account on any trade, and also you have a stop loss in place, okay, that you ensure and watch is effectively filled. So those are kind of like factors that we get to a sort of affect scalping. So when it comes to the instruments to look for as a scalper, what we've got to remember here is that there is a cost of business with trading, right? And in many ways, okay, some of that cost of business, can be in the spreads and the commissions. Now, you'll find that, for example, if you're going to scalp on certain asset classes, you'll find that Admirals offer, very sort of kind of almost spread-free, zero-free kind of trading, right? But what you have to look, if you're going to look at sort of, FX pairs, or, maybe even one or two of the indices, what you're looking for is cheap instruments to trade. Now, how am I defining cheap? What I'm defining cheap as is that they have very tight spreads, okay? Really tight spreads, because, you might be in a position with, 6, 7, 8, up to 10 ticks or pips as your stop loss. But if your spread is 5 or 6 pips, well then the cost of business against the cost you spread against your stop loss, it starts to eat into that. It starts to make a big difference. So ideally you're looking at elements with that basically have very tight spreads. So for what I would suggest is for FX traders, maybe look at the sort of the US dollar pairs, the majors, okay, the majors against US dollars, because in many of those cases the pips, the spread is around about 1 pip, give or take a little bit. So it's what it is, it's kind of tight, and you can operate. You also need something that has a bit of a good daily range, okay? So some people try to sort of will scalp things like the bond, okay, but the bond doesn't have a huge range. Some of the FX pairs, sometimes sort of like, for example, the euro against the sterling, okay, it's better than it used to be, but sometimes that can be very deathly quiet in terms of the range. Remember what I was saying about volatility and liquidity. You need to have some movement to be able to get your trade on. What also is something that supports technical analysis or price action at lower time frames. All right, so you find things like the indices like the DAX, okay, in the European session, that does very well in terms of both price action you can trust, and also the technical analysis works very well. When it comes to trading, what we want to be aware of is that elements of major support and resistance. Okay, as long as I've been doing these sessions, as I talk about, whenever you open any chart, you draw on those levels of support resistance monthly, weekly, daily. Okay, and you might say, that means nothing, Paul, I'm a scalper, but you'd be surprised. Okay, you'd be surprised. Price remembers these levels. These levels, they become important, especially as a scalper, because it's actually how market reacts to those levels that it becomes kind of interesting. Also, things like previous days, lows and highs. Okay, I find that in particular very, very useful. That is something that that is where my bread and butter would be. Okay, personally, in terms of my own sort of intraday trading and scalping, and also big round numbers. Okay, big round numbers, triple zeros. You'll find that they are very interesting as well. Okay, just watching to see how the market reacts, and I'm going to show you one of the little setups based around. Jessica said, "What's your favorite pairs to trade if you have any?" Of course, certainly. When it comes to the indices scalping, I like the DAX. Okay, and I will also. It differs a little bit between sort of Dow and the Nasdaq, depending upon how they're operating and they're moving. Not so much the S&P 500. Some of the kind of major FX pairs. Okay, so as I said, the US majors, but equally also some of the other, particular sterling pairs, because that kind of suits me in my own particular style, and a little bit of the bond as well. DAX is very good, so Jessica. Yep, you're absolutely right. That's it's a good one to look at in the morning if you're in the European session. So let's talk about because I appreciate we always have we're always a little bit under the cosh with the time. Let's talk about a couple of scalping strategies that you could take away and start to look at. Okay. My suggestion is, this is called the BLT, the big level trade. My suggestion is, which might sound a bit strange, is actually don't trade it. All right, to begin with, don't trade it. Use this as a training exercise to get you to look at how markets react at big levels. All right. And then once you've done that for a bit, then you might see opportunities, okay, to try and scalp it. But this is it's a interesting element to see how markets operate. Not unsurprisingly, because it's a big level trade, it can combine event-driven and kind of relative value styles. All right, but it's more the event-driven that we're looking at. So, how do we set up the BLT? What does it actually mean? Okay, so what we're looking for is, as part of the setup, we're looking for a market trending towards a key psychological level, okay, a big round number, the big level, okay. So, a couple of months ago, I was trading it on during the height of the kind of Wall Street bets trading. There was a big push to say that silver would break out, and silver, was going to break $30 and actually sort of, go on its way. And actually, price, it got up, tickled the soft underbelly of $30 and then rolled away. Okay, price pushed up to a big level trade. Okay, and that's when people start to get interested, because dealers, market makers, hedge funds, they know that there will be orders there. Okay, and they know that because there are markets there or orders there, there's going to be a higher probability of a reaction. Therefore, this is an opportunity for you to trade like a hedge fund and scalp away. All right, but as I said, my suggestion is just watch this the first few times. Don't sort of jump in with both feet. Just use it as a training exercise to get you a little bit of an idea and view about how markets start to operate around big levels. So here you go. Here is silver itself. So this is a very. Let me bring up the old drawing tool here. Okay, and this is silver. And this is around. This is a while back now. Okay, but this was around the $15 mark. Okay, it's a big psychological level, and hopefully you can see here. Okay, over the days. All right, this is over a couple of days where actually price consistently tapped that level. All right, it hit it. What's that, about 6 times? Okay, it hit it about 6 times over 3 days before the breakout actually occurred. All right, but just look at that. Just look at the price action there. It's constantly going up. It was tapping it. And very often, it would just go past it, but then fall away. Okay, it would tap it, fall away, tap it, fall away, tap it, fall away, tap it, and then fall away a bit before it shot off. Okay, this is around looking about how does the price react around those big levels. Okay, around those big significant psychological levels. All right, and every instrument you look at will have those levels. All right, we'll have those levels. Doesn't matter whether you're trading the DAX or whether you're trading pound against yen, or whether you're trading gold or whatever, okay, or silver. They will always have those levels. So, here's the thing. Everybody knows those levels, right? Everybody can see those levels. They can see it on a chart. They can see those big psychological levels, okay? So what you're doing is everybody's watching that, okay? And what you'll find is there's lots of breakout traders looking to trade a breakout of that. But as you can see here, price tapped that level 6 times before it actually broke out, didn't it? And that can be useful information. Remember, I did a session a couple of weeks ago about trading sort of false breakouts, and this BLT trade and false breakouts, they're of a kind of a similar theme in that sense. All right, so this is what you can see happen, and this is what is actually as I said, take a bit of time to watch how these markets react. If you kind of zoom into it, all right, when we zoom into it for a couple of the areas, just look how far did actually silver go. Okay, when it was tapping that level, it literally only went, okay, I think about what was it, kind of about a maximum of 15 cents higher. Okay, that was the maximum before it broke out. That is useful knowledge to have. That's information that that we can basically use, and you can start to build a trade idea around. So here it is, and this is, as I said, watch this. This analysis. So looking for a level tapper. Yeah, absolutely. It's a significant level. People are going to watch. People are going to wait, and they're going to want to see. So how you will see some of these hedge funds will trade is that they would have, in that case, a sell element. Okay, sell wall element at the actual figure, at the big level, at the big number. Then they might have a second sell element. Okay, 5 pips or 5 ticks. Okay, over that number, and then the third element, okay, sell at maybe 10 ticks, 10 cents, 10, whatever's the smallest traded element on that particular asset. So all of those there are the stops set for 20 above, all right, and a profit for 2/3. Okay, so about 5 pips below the level. So 5 pips. I'm calling it pips, but it could be a tick, it could be a point, depending upon what particular asset class you're looking to trade. But as you can see, this is This is certainly not the way I would normally trade. Okay, this is very, aggressive, scalping of a particular level, a big round number level. Okay, and that's why I say to do this, just watch. Okay, spend some time just watching, seeing how this plays. Then maybe trade it on demo. Okay, sort of just take yourself a bit of time to understand and get ready to work out this. So no, Anil, this is not sell. It's just that example we looked at there on silver. Price was coming up to that 15 level. It might, of course, well be that price is coming down to the level. Price might well have been above it. So here, as I said, that these elements here that you can see there, but there's within that all works very, very well. But it's not easy. There's more rules. There's more rules to take on board, ladies and gentlemen. You have to be prepared ahead of time and stay vigilant. Remember what I was saying right at the start? This is something you need to be prepared. The thing about this level is people know that level. They can see that level. It's not, it just doesn't come out of nowhere. People can normally expect and see where might be the kind of psychological numbers. If the trade does not work out immediately, so it has a maximum of 50 minutes, then close the trade. Okay, this isn't you sat here waiting for it. Okay, this is a scalp. Right, the trade either works or it doesn't very, very quickly. Although the moves are similar around most round numbers, this trade works best when at the end of sort of, let's say, an overbought intraday trending move, coupled with strong psychological numbers. This is the big level trade, right? You're looking for those 000 numbers. Advanced traders may also look at previous days' highs and lows on big news days. Okay, that's something that advanced traders may want to take away and have a particular look at. So I'm not sure I understand that question there, and the chart example does not relate to the slide that follows. I'm not sure what you mean by that. The couple of other examples, okay, or the couple of other rules, all right, is that you're not trying to predict the future here, all right. You're not trying to think that you know best, to forecast. You're just riding the coattails of the high frequency in the market makers. Okay, that's what you're looking at. You're in it for a few quick ticks, a few quick pips, a scalp. That's what you're here to do, to literally scalp a few ticks out of the market. And also, this is very important, no more than 2 attempts in any one day. All right, no more than 2 attempts in any one day. Why is that? Well, because of course, the more times a particular level is tapped, the less kind of resistance, or support there may be, and so at some point it's going to break through. Okay, and I think we saw on that silver slide, on the one day when it did break through, it hit it a couple of times, and on the third time it broke through and went away. So no more than 2 attempts in any one day. All right, that's what you take. That's what you take on board with the BLT trade. So in this particular case, all right, here we go. Just quickly, we can see here, okay, what you'd be looking at is, that this $15 level is important, all right, because it's just a big round number there, right? And you can see here, actually, you had in this particular case, you probably had 2, you had 3, you had 4 chances to tap that. But remember what I said, only 2 attempts in a day, only 2 attempts in a day, okay? That's, this is about discipline, okay? And it's about following the rules. In this particular case, you saw here, okay, the next day it had a first tap, then it had a second tap. But what happened on the third one? Well, actually, that's when it broke through, all right? So remember what I said, okay? In this particular case, you're going to be selling at the level, all right? Price is coming up from underneath, and you're looking to sell. You're going to be selling into it, but you never do it more than 2 times in any one day. All right, that's those are the rules. That's the rule to help keep you safe in the long term. Super. So, and hopefully that explains, that this silver slide, it shows where it tapped about 6 times before it broke through. But you're only be selling that level, and you'd only be doing that twice a day, a matter of twice a day, no more than that. Okay, no more than that, just to keep you on the safe side. So just a couple of examples here, so this was pound 50-minute chart. This was around the 140 level there. Okay, big round number, and hopefully you can see there, during the day how it's tapped up. Okay, price rose up to it, sold into it, price rose up to it, sold into it. Okay, on that particular day, as I said, big round numbers, 2 taps, no more attempts than that. That's not what we're not here trying to wage a war. You're literally trying to sort of just steal in and take a couple of trades. This was on the this will be the dollar index, okay, and we can see the the big round number was at that time 100, okay, all the zeros, 4 big zeros, and hopefully you can see that actually price hit it a couple of times before it actually went through. All right, so once again, it's up to it and selling off to it, selling off that number, okay, until it actually breaks through it, okay. So that's why I said no more than two attempts a day. Them's the rules, okay, and there's a good reason for them rules. So that was the BLT. Okay, let's look at the other one. I appreciate, with times pressing on. Oh, this is just a 1 minute scalping strategy for you to take away and have a look at. Okay, it's a that's what we'll be looking at. So it's a simple scalping strategy. Easier for me to do than say, to use on 1 minute charts and 5 minute charts as well, depending upon your appetite. Key features are: it is a visual tactic. It is you are manually defining your entry based on the pullback. It's manual execution. It's got manual but system exits, and it's viable for cheap instruments, namely ones with small spreads. So DAX, Dow, FTSE, Euro against the dollar, pound against dollar, Euro against the yen, etc. Okay, ones that have very small scalping, very small spreads. My apologies there. Okay. So just a little bit of a tech. So what is the setup for the 1 minute scalping strategy? It's price action, 1 minute charts. What I have on my charts, I have fractals, which you can find on the MetaTrader platforms. I have 3 EMAs, okay, 3 exponential moving averages, the 50, the 100, and the 150, and also a 200 SMA. But the important ones are 50, 100, 150, which hopefully you can see there on that chart, okay, red, kind of brown, purple. The colors don't really matter, as long as you know what they are, that's what matters. 50 MA gives you the short-term trend, 100 gives the medium-term trend, and the 150 and the 200, they give you the kind of longer-term trend. And I mean, we're on a 1 minute chart, so the longer-term trend is, over the next hour or so. Okay, that's what we're particularly looking at. What are we looking for? Okay, so first, set the scene. We want the price to be above all 3 main moving averages, which are in alignment. That gives us a bullish emphasis. We now have a bullish bias. On the flip side, we want the price below all 3 main moving averages, which are in alignment. That gives us bearish environment. Okay, so this is the filter. All right. Once we see those things happening, we know whether we're in a bullish environment, so we're going to be a buyer, or whether we're going to be in a bearish environment, which means we're going to be a seller. Ideally, and it is ideally, like to see the moving averages moving at approximately a 45-degree angle. Should be in a nice steady angle, like you can see on those 2 charts there. Okay, but anything between 30 to 60 degrees is good. But what you find is if it's too steep, that's normally an indication that that on a 1 minute chart the market's getting a little bit out of hand, probably getting a little bit frothy. It's probably actually going to do a little bit of a reverse at some point. We're once again looking for that kind of Goldilocks environment. All right, okay. Price is for a bullish environment. It's above all the moving averages in alignment, and they are just happily chugging along. Okay, they're around about a 45-degree angle. Okay, there. So it's as I said, it's that kind of not too hot, not too cold, just right. Okay, and that's what you're looking for. But you have to realize that if the moving averages are flat and not in alignment, okay, then just leave it alone. So if the chart looks like that, where the price is in and around the moving averages are flat, okay, they're just going sideways. That's telling you that that market is consolidating. There is nothing going on there. So if there's nothing going on there, why would you try and trade it? Okay, don't make trading any harder for yourself than it has to be. All right, we're looking for either a nice bullish environment or we're looking for a nice bearish environment. Okay, when it's not, well then we're doing nothing. Let's keep it simple. A bullish trader, right? Once we've established a bullish market environment, in this example, we wait for the next step. We need price to take a breather from that uptrend to retrace back in towards the moving averages. That's what we're looking for. So yeah, Vera says, is this for the 1 minute chart? Yes, it is. Okay, it's for the 1 minute chart. This. So as it says, once we've established a bullish market filter, we wait for the next step. We need price to take a breather and then to retrace back in towards the moving averages. What we actually needed to do is we needed to test the 50 and the 100 moving average to confirm that we have a strong trend in place, okay? And hopefully you can see there, this was just a drawing tool here. 50, 100, price has been in a bullish. You can see price comes back, it tests the 50, then it tests the 100. In fact, it tests the 100 twice with a nice double bottom there with a pin bar before price continues on in its merry way, all right? That's what we're looking for. Once it's tested its pullback, we are waiting for the trend to re-exert itself. If it doesn't, then no trade. If it does, then we just use a very simple trigger. Once price has closed beneath the 50 period moving average, then we wait for price to close back above the 50 period moving average. This might take one candle, it may take several. When it does, you enter long at market. So you're just buying the market, okay? On the close of the candle, back above the 50 period moving average. What you can see here is, price clearly sort of had a bit of a drop there and tested the 50 and the 100. And then here it closed beneath the 50, okay? That candle closes beneath the 50. And then the very next candle, bosh, closes back above the 50 period moving average. The trade is on. We're buying, okay? We're buying, bash, we're in. Okay, not messing around, not sort of, waiting, for hours. It either happens or it doesn't, okay? Once we've entered, then we need to manage the trade. The stop loss is standard one, goes beneath, okay? Your stop loss goes beneath the recent low or the fractal. Or if you're very aggressive, as in this case, you're beneath the low of the last two candles. It just so happens that is a fractal as well. So Anil was asking about the randoms. Anil, that was the big level trade. We're now on to the other tactic, which is the 1 minute scalping strategy. So Anil's talking about asking about targets. Don't worry, we're getting there. Don't you worry, we will be getting there. What we want to know first and foremost is we know where we're getting in. Here, we know where we're getting out if we're wrong. Okay, we know where our stop loss is. Okay, we know where where our risk is. Okay, that's the first element. We'll talk about possible profits in a moment. I try to aim for the 261 fib extension, all right, in terms of my targets. That's what I looked at. So, I'd be looking for where my entry is, where my stop loss would be, and then a 261 fib extension of that, okay, to be the particular level I like. And if I'm feeling aggressive, if that market is very, very strong, then I might go for a 423 fib extension, all right? But that's why I like to use those as targets because it's simple and it's consistent for me day in, day out. But I also appreciate that some of you like to use trailing stops and you might want to try and drive the trade as possible. If you want to use a very simple trailing stop, then I suggest you just trail beneath the low for a long trade of the last 3 bars. That's the way I particularly like to look at going for it. Alex says, what is Fib? Fib is it's all about the Fibonacci, and it's a tool that you will find on the MetaTrader platform. And if you look in the Admirals webinar archive on YouTube, you will find that there are actually quite a few videos in there explaining Fibonacci and how you can utilize it, and actually how you can utilize that tool itself on MetaTrader. So be sure to take that. So there you go. So price closes beneath the 50. Price then recloses, okay, back above the 50. Trade is on. Stop beneath the recent low or the recent fractal. Targeting for me 261, okay, as a general rule. The 261 fib extension from my entry to my exit, okay. That's it. Bosh, simple. Because I'm not trying to be, I'm not trying to, to be a rocket star, okay. In scalping, things are happening fast, so you need to be able to operate effectively. But as I said, you might want to use a trailing stop, in which case I'd go for the last of the 3 bars. Any low of the last 3 bars, every time a new candle completes, the low of that, okay? So, you want to trail your stop beneath the low of the last 3 bars. Just be aware that, okay, when you're trading on 1 minute charts, you might end up having to do this at market, because you're very close to the price. You might not necessarily be able to set pending orders for both your entries, your stop losses, your targets. You might actually need to do this at market. You might actually need to watch and babysit the trade. Hence why I was saying you can only really do this for like 1 or 2 hours a day. It's not something that you could do all day, because you'll just drive yourself to do that. Quincy says, could you modify your order so that 261 you take half the profit of the table, believe then rest to see if it goes to the next level? Yes, you can do that. If that is the way you would like to manage your trade, you can do that. Personally, all right, and this is my personal trading style. These days I'm kind of an all-in, all-out kind of guy. I'm normally actually looking to get all my position on and then to actually add to it, which is not something really suitable for scalping. It's for more intraday and longer term trading. But yes, I appreciate new traders sometimes need a little bit of sometimes it gives them a little bit of confidence, okay, to be able to take a couple of little bit of winning parts of the trade off. And if that worked for you to have almost like 2 trades, one to the 261 and one to the 423, yes, you could do that. I wouldn't say that is unfeasible as a trade management style. Just remember that will have an impact on your overall profitability though. So for a short trade, it's just the same but flipped in reverse. Okay, you need the 3 moving averages in alignment: the 50, the 100, 150. Price has to retrace back in towards that area. Okay, the 50, the 100 area needs to close at least above the 50 period moving average. All right, it needs to close back above the 50 moving average. And when it recloses back below, all right, when it recloses back below, so in this example here, it closes above the 50, closes above 50, and then, bosh, I think it's there. We start to close beneath the low, right? It starts to back close beneath the 50. That is when you're going short at market. That is when the scalp is on, ladies and gentlemen. So yeah, here we go. This is an example of on the DAX. As I said, the DAX is quite suitable for it. As you can see, its price is in alignment. Okay. Price comes down, and then, as I said, it needs to take a breather, trades back, it gets back up above the 50. Then here, as soon as it closes back beneath the 50, trade is on. All right, and you'll be, in this particular case, you'll be placing your stop above here, because it's, as I said, it's the last kind of recent high. Okay, the last recent fractal that will suit us. Price comes back up again, drops, closes back beneath the 50. And that that would be a second opportunity to scalp that trade there. Okay, and that's what you're looking for. Okay, these can happen quite quickly, can happen quite swiftly. All right, and you just need to you just need to, as I said, know your platform, know your trading strategy. Okay, and be ready to execute it when the moment arrives. So this example, this was the kind of the Aussie against the Japanese yen. Remember what I was saying is that ideally you have to have the price above the the moving averages, but also we like to see it in a plodding away there at a nice angle. Okay, all right, that's what gives us lots of trade opportunities. Okay, that's what we see there. Okay, that one doesn't work, but that one here, that one does. Okay, and then there's another one later on in the session. Okay, so that's what we're looking for. That's the idea. When you're seeing a nice movement like that, that is something to be quite happy about. Okay, and that is the kind of ideal environment we are particularly looking for. Also, this is pound against dollar on the 1 minute chart, and just give me kind of examples in that. You can see that here the price all gets in alignment. Price is above the 50, above the 100, 150. It's plodding along. The 50 is acting as quite support. Here is where it closes beneath the 50 period moving average, and it goes down. It tests the 100, and then what happens is it bounces and it closes back above the 50. So you're entering long there at the market. You stop beneath the recent low, and then you're placing your target in front of you. Where it is. For me, it would be the 261 extension of that particular kind of setup there. So a couple of final points, all right, for to help you with succeeding in this is that cut your losing trades quickly. All right, don't hang around hoping that those trades are going to come back to you. If the trade is not doing what it should be doing, cut it. Okay, this is scalping. This is not about you just hanging on and hoping it works your way. It's the same with the lack of momentum. Okay, what we're looking for is that price has had a breather, and we're expecting price to the dominant trend to re-exert itself and to take, to sort of to move, in that particular case, move the price down. So if there is no momentum, then you probably shouldn't be there either. Don't be surprised if you have a good few scratch trades. Okay, that's okay. It's scalping. Okay, things happen fast. All right, your job is to just make sure that cut those losing trades as quickly. But it is possible to have a few scratch trades followed by a string of winners. That's perfectly possible. All right, don't be surprised at that. As you become more experienced, okay, as you generate a better understanding of market analysis, losing trades can help pinpoint market reversals. All right. And that can actually help you can use that information to recover losses. What do I mean by that is that the market is always communicating to you. All right. The market is always telling you what it wants to do. It's your job to understand and interpret and to read that. Okay. And if you've had a couple of losing trades because actually the market is reversing, well, you have just paid for information from the market, and it's up to you to start to work out, well, how can I use that information, okay, to help me sort of trade in alignment with where the market wants to go. Haresh is talking about, can we get recordings of this webinar? Yes, what you'll find is that this webinar will go on to the Admirals YouTube channel. So that's probably normally takes about a day or so for it to get up there. So in a day or so's time, okay, check in there, okay, introduction to scalping, and you'll be able to watch them. Be sure to give it a like, and be sure to ask questions or comments, because we do try and answer all of them there. So in conclusion, ladies and gentlemen, scalping is a popular way to engage with markets, but it is utterly important to be prepared and to know what you're letting yourself in for. It's important to choose liquid, cheap markets. Okay, so DAX. Okay, DAX, Dow is very good. All right, sort of the US dollar. Okay, the US dollar majors, because they're like generally around about 1 pip. Okay, you've got tight spreads. Patience and discipline become even more important while scalping. Absolutely right. Okay, things are going to happen fast. You need to know what your strategy is, and you need to know what you need to do. And it's like anything in life, practice makes perfect. So I was hoping for us to see some live market, but we're already 5 minutes over our time allocation. Okay, I'll be getting in trouble from my from the wonderful web assistant I have here. But before that, okay, don't forget to join us next time. So come and join me on Wednesday. I'll be back here, and I'm actually going to talk about the trader's journey. All right, education, mentoring, and coaching. What does it actually all mean? What does it do? What does it help? And I'm going to talk about the different stages of a trader's journey. Okay, and we're all on it. We're all on a different part of the journey. We want to talk about common pitfalls that a trader needs to avoid. Also, how to avoid the scammers. Okay, there's an awful lot of them out there, unfortunately, and we'll talk about that. And I'll give you a little bit of an insight into what is the difference between education, mentoring, and coaching. How do they work? How does that help you? So come and join us, okay? Wednesday, 21st of July, 2 p.m. London time. Check your inbox for the webinar link, or sign up on the Admirals website. So if you want to contact us, okay, you can do. All right, okay, they're all there. You can see the emails, okay, and on YouTube and Facebook, and as I said, on Instagram as well. So as I said, ladies and gentlemen, unfortunately we've run out of time a little bit. I put too many slides in because I try and give you as much as I can, try and impart as much information as I possibly can in our kind of small allotted time segment. But listen, I hope that's been interesting and useful to you. Okay, that's giving you just a little bit of an insight into what you can look at when you're having an introduction to scalping. All right, and then invariably, as I say, practice makes perfect. Make sure you know your platform. Make sure you know what you're actually engaged with and doing. As always, listen, thanks for joining us. Okay, if you're watching this later on demand, you're watching this on YouTube, well, make sure to subscribe to our channel. You'll find all the details there. Okay, make sure give us a like. Okay, if you've got questions or comments, slap them in there. Okay, and we'll try and get back and answer you. Okay, so it's just for me to say, thank you for joining us. I hope you have a fantastic weekend, and I wish you the very best success in your trading endeavors. And I'll see you next week. Take care, everybody. Trade well.